Hello, welcome again to FairtaX Power Radio. I'm Bob Paxton.
I'm Bob Scarborough.
And we are the FairtaX
FAIRtax
Guys
Guys.
with Fat Albert here representing the complexity and the ever-shifting nature of the income tax. And you've got your world-famous scrolling banner that I'm still waiting to see at a Wake Forest basketball game. But I'm sure that will not be a problem one of these days.
One of these days. Yeah, the problem right now is I'm working early in the morning, and by tip off for the evening games is like 7 o'clock.
Yeah,
I
your
think
sound.
it's not that bad.
Some of them don't tip off till 9 o'clock, and you're sound
Yeah,
asleep by then. But
I'm way in, man. I'm way in. Way
anyhow, well, again, thank you for the program. We would invite you to please share this video on your social media. Tell your friends and family about FairtaX Power Radio. Tell them about the Fair Tax. And just kind of look at the little meme over my shoulder here. The difference between the Fair Tax, a perfectly straight, uncomplicated, no problem system, versus the mud mess that is the income tax represented by the rail yard with switches and rails going every which
That's
way.
true. Well,
That's absolutely nuts. And the reason we've got an income tax that looks like the income tax does today is because the Congress critters can't resist leaving it alone. They
I
can't
know.
leave well enough alone. It's amazing the degree to which the people up there are just constantly messing with the tax code, changing this, putting this in, taking this out, and it's just a horrible mess. If you go to congress.gov, you put the words Internal Revenue Code in quotes into their search bar at the top of the list, selects legislation in the current Congress, as of the day we're recording this, 839 hits. That's how many proposals have been made to change the tax code in just the 6 months that Congress has been in session. I
Yes.
guarantee you there have been considerably fewer than 839 days gone by so far. So these are getting, three, four. I didn't do the math yet, but these are like three or four every day. There are multiple proposals to change the tax code, and it's just crazy. And of course, not all of them pass, but all of them, I'm sure, most of them anyway, have got a lobbyist behind them. So let's get cranking here with this Congress.gov segment on Fair Tax Power Radio today, and open up with HR 3698 from Representative Joe Wilson of South Carolina. And would you believe that this has been just a constant theme on FairtaX Power Radio's Congress.gov segment about all of the different tax credits that are currently in the tax code. And Representative Wilson here wants to amend the Internal Revenue Code to provide, apparently this one doesn't exist yet, wants to provide a refundable credit to individuals who donate certain life-saving organs. Think about that one for a second. Okay.
Okay, I thought about it.
Well, I guess, I think certain life-saving organs. I mean, you've got two kidneys. People could donate a kidney and continue to live, but a heart donor, is not going to be around to get this refundable tax credit. Representative Wilson wants to get in there. I think I'm not sure that this would goes in. Oh, excuse me. Not sure this one goes in the Hall of Shame, but it goes into the. This is just really crazy to
Yeah.
amend the Internal Revenue Code to get a refundable tax credit if you donate certain life-saving organs. Of course, there's no
I
text
have
in
a
here.
habit.
I don't know which particular life-saving organs are in play here, but that just really caught my eye when I saw that one.
I have a Hammond organ.
Oh, you cheating? Yes, you're cheating. Oh, can you play it?
No, that's why I need to go ahead and get rid of it. I think it's life-saving because I don't know how to play it.
Oh, mercy. Okay.
Yeah.
Oh, excuse me. I got a tickle in my throat here. I
Yeah, it's time for
need to drown it with
Cheerwine.
some cheer wine here.
See, he does that
Ah,
every time. He pretends to choke so he can take a sip of Cheerwine,
ah,
born in North Carolina.
I don't need to fake a reason. If I want cheer one, I'll just get it.
That's
Okay,
right.
this is the Heritage Act, S 1927 from Senator Cindy Hyde Smith of Mississippi. This one I got to open up to get to where the summary is. And this Heritage Act is, let's see, scroll down to it, a proposal to amend the Internal Revenue Code to increase the limitation with respect to the aggregate reduction in fair market value of farmland for purposes of application of the estate tax. Is that complicated enough for you? Does that pass the complex test and can get into the tax code for you?
Well, I think anything can get into the tax code, and we were talking about this last week. It's almost as if a lot of the representatives are spending, in at least their staff, a considerable amount of time. The representative rushes in. We need to do this bill and associate it with the tax code, and here's the details. And then they send, someone in their office off to actually compose it. I would love to take a tour up there to see, just to sit in one of the offices and watch what happens, just so I can understand that process better. Just insane.
Okay, here we go. Now, let's go on. Representative Stephen Horsford of Nevada has put forth HR 3590. Now, this one's going to take some deciphering to figure out what he's doing. So, this is to amend the Internal Revenue Code to clarify that determinations regarding whether an individual who is a contractor providing services to an educational organization is a full-time employee for the purposes of the requirements relating to an employer's responsibility to provide health coverage and are subject to rules that apply to employees of educational organizations. How's that?
Yeah. And again, we're underscoring the complex, how the tax code gets so jammed up with things that really have, nothing to do with, legislatively speaking, nothing to do with other than a special interest of some kind.
Yes, but to clarify determinations regarding whether an individual who is a contractor, all that stuff, are subject to the rules that apply to employees of educational organizations. That is why the tax code is as much gobbledygookery as it is at the moment. Let's now this one was pretty cool here. This is S 1919 from Cindy Hyde Smith of Mississippi. Let's see. This is another one I've got to open up here and get to where the text is, where I can tell you what it says. And this is the Buying America Cotton Act of 2025 to amend the Internal Revenue Code to, look at this, establish a domestic cotton consumption credit. That one's laughable, isn't it?
Well, you think about how cotton is used. It's, shirts, sheets, socks, cotton balls, for applying or removing makeup.
Apparently now that you have to use the tax code to encourage people to consume domestic cotton, I assume, as opposed to imported cotton. The American South isn't the only place where cotton is produced, but this is
we offshored a lot of production of cotton. Manufacturers moved away from places like Spindale, North Carolina, around about 25 or 30 more years ago this happened. And now is this tax code ploy attempting to encourage people to do something here? Why
don't know. Why do you need to use the tax code to do all that stuff? That's the point.
Right.
We need to wrap this up here. One more. This is from Representative Glenn Grothman of Wisconsin. This is HR 3540, HR 3540. And this is actually one that might actually be, I won't make fun of this one. This is a good idea. To amend the Internal Revenue Code to sunset. He wants to get rid of the low-income housing tax credit and for other purposes. I don't know if we can get that one through or not, but Representative Grothman wants to sunset the low-income housing tax. Again, this is just an example of what we talk about, the instability of the tax code. Somebody obviously put this into the tax code a while back. Then there'll be proposals to change it. There'll be proposals to change it again. Then now this proposal to get rid of it. the tax code as it exists is just so incredibly unstable, changes all the time, as is documented by what we do here every week here on the Congress.gov segment, that they just can't leave it alone. It's always changing. We need to get rid of it. Nobody understands it. Let's pay our taxes at the cash register when we buy stuff. End of story. Game over.
And the efficiencies that come out of that, even during a transition. I mean, it would be like, okay, it's income tax day, that goes down and goes away, IRS goes away, and the next day the implementation. I'm sure it wouldn't happen just like that, but the implementation of the consumption tax, represented by FAIRtax, uh, is going to make life easier for everybody. States are even, there are a number of states out there that are working towards a very minimal income tax and turning to either consumption or some other form of tax. But we see that happening in a lot of places.
Oh,
And excited to hear about Florida, Tennessee, Alabama, North Carolina has been for a number of years, moving towards a lesser and lesser income tax that declines every year going forward.
all right. Well, we used a bit more time than normal here on the FairTax Power Radio's Congress.gov segment. I'd say that's my favorite segment of I love to just dig in
Yeah.
there and see what these guys are up to. But so we do need to move on. Now, I will have to say that a couple of days ago, I had a what I thought was going to be a rather major oral surgery procedure. I had a wisdom tooth in the back that needed to come out. And I expected to be out of action for a couple of days with that. And man, it was just in and out over with no time. But since I was expecting to be out of commission, I gave you an assignment, which was come up with something to talk about for this thing. And you have come up, you sent it to me, and I just barely got a chance to glance it before we started recording. So I will toss it over to you, and you may introduce your subject, sir.
Well, uh, you go online, and if you're like me, you're always looking for commentary or articles or discussions about the consumption tax, not necessarily specifically the fair tax, which is what the fair tax is. It's a tax on consumption. The components of the fair tax include uh, eliminating the Internal Revenue Service, and a companion bill would basically rescind the 16th Amendment, which would give Congress the ability to tax via income. The Tax Foundation is not a bad place to go just to learn. Like, for example, I talk to people and I say fair tax is a tax on consumption. Oh, you mean like Europe's value added tax? No. Uh, or uh, uh, like a sales tax from the state? Yes. Excise taxes, tariffs, and so on. Uh, but the consumption tax, through the legislation that is HR 25, the Fair Tax Act, is completely different. And so we have to start there to understand people's misconceptions about what exactly it is and does, because depending on where you go to get your detail to learn, you could end up with a more confusing outlook on what the fair tax is than when you started, because there are a lot of seemingly uh, intelligent people out there that are composing articles or having discussions that miss a few things that are important with regard to uh, the fair tax as it stands. And one of the biggest things that comes to me, and I'm sure you hear the same thing, um, people have this fear that the fair tax is going to unfairly affect people at the lower income scale. Uh, two people working two jobs, and that kind
Hmm.
of.
Yeah,
So
we hear that all the time because sales taxes, as people are used to them and understand them currently, there are a couple of things about them. They are mostly exclusive, means they are not included in the price of the thing. They are tacked on at the cash register. So if you got a 7% sales tax, $100 item, you're charged $107 when you check out. It's not included in the price. And I mean, everybody pays it. Doesn't matter how much money you've got, whatever. And so sales taxes by nature generally are harder on lower income folks because there's no exception to it. I mean, if you take 7% away from a single mom that's on SNAP and take 7% of income away from Elon Musk, you can see the difference in how the sales tax would impact the single mom a whole lot more than the rich guy. But the fair tax does have a provision to make sure that doesn't happen. So the fair tax is not like the consumption taxes that most people are familiar with. Now, you sent me two articles. Which one are we going to look at here first?
the one that I'm starting off with is the Tax Foundation article talking about the differences between a consumption tax and an income tax.
Okay.
And it's not entirely detailed, but it does set the stage for what we're seeing happening in trends across the great United States in several states, and some have been going on for almost a decade, if not more. Obviously, there in Florida, you have no income tax.
Mm-hmm.
Tennessee has very little income tax. I think there was one year or so ago that might still be out there that taxes a piece of a medical facility like a doctor's office or something.
Okay, yeah.
This has
Generally, I'm sorry, I'm reading from this article. It says generally consumption taxes are an economically efficient way to raise tax revenue compared to other tax revenue sources. Consumption tax revenue as a share of GDP tends to be relatively stable over time, even during economic downturns. And this is where this guy goes off the rails. Despite this, or at least it's true about most consumption taxes, but not the fair tax, that they're aggressive because lower income earners and households tend to spend more of their income than they save.
right, and this article is not about this is not referencing the fair tax at all. They're just balancing the difference between a consumption tax and an income tax. And we know that the Fair Tax Act has in it a provision that essentially offers a refund called a prebate, which means because you get it ahead of the month that you're getting ready to spend it in, and it represents an amount of money up to the poverty level based on your family size that you get to take and use that money to buy essential goods and services. So essentially, everyone is untaxed. Everyone in the status and is in the in the Social Security system. If you got three members in your family, you and your wife and a child, or four or six, then you get a rebate. You get a refund on expenses that you haven't yet paid, and you can use that. So everyone gets untaxed up to the poverty level, which is something that this tax foundation review of a consumption tax and an income tax, it's not, they don't talk about that. So the guy is saying the downside of consumption taxes is they are regressive, but the folks that put together the fair tax understood that and took care of it with the prebate.
Yes, they did. But the economic impact of consumption taxes versus income taxes is dramatic. And we've had Professor Kendall on, the economics professor from University of Virginia up there, and he says that it's almost unanimous among economists that consumption taxes are just much, much, much less injurious to the economy than an income tax is. So if you want to help your economy, get rid of your income tax and go to a consumption tax. And I'm just astounded that we haven't done that yet. But then on the other hand, yeah, when you see how much the Congress people who write the tax code benefit from the current system in the form of campaign contributions from lobbyists who want to buy favorable tax treatment for their clients, that the Congress critters who write the tax law benefit greatly from selling tax favors. I mean, that's just the plain truth of the matter. And that does not happen. That you've got much less room to game the system for your own benefit if you're dealing with a consumption tax versus an income tax.
And of course, as I always like to say, the consumption tax encourages savings and investments. Income tax basically discourages that behavior, according to the Tax Foundation article, because it taxes both consumption and savings. You get your Social Security check, you got taxes are going to be paid on it. So, or to pay tax on that money, supposedly.
Yeah, and income tax, people don't think about. Income tax does indeed tax consumption because it takes money away from you that you can no longer use for consumption if the government has taken it away from you before it even arrives in your hands. Don't get me started on the insidiousness, if you will, of withholding, where the government sets itself up as the highest spending priority for everybody. You will pay me before you buy bread for your family, before you buy milk for the baby, that Uncle Sam takes his cut of your check before you even see it. That is just morally reprehensible. And I don't understand why people continue to put up with that. With any consumption tax, it does not tax your income; it taxes your spending. You get all of your paycheck under the fair tax with no withholding, no payroll taxes, none of that stuff. And you decide when you pay your taxes by when you choose to buy things, and you can choose how much you choose to pay by whether you want to buy a new article, or which will have the fair tax in it, or a used article which would not. Consumption taxes are a lot more flexible than income taxes. There are just so many advantages to getting rid of the income tax and replacing it with a fair tax. We can't possibly go through them all in the 5.5 minutes we have left on this program. Go.
Well, the next article I chose, it was one from a little over a decade ago from Deloitte, one of the major financial accounting advisory companies. And they were basically compiling information for this article regarding state taxation trends, and then looking at consumption tax versus the income tax at the state level. And we know the benefits to Florida. We have experienced in Tennessee that we see other states moving in that direction. North Carolina, decade or so ago, passed a law that is the income tax is reducing percentage wise every month. Kansas, Louisiana.
Well, Mississippi just did the same thing. We talked about that not long ago, but they're not replacing their lost income tax revenue with a consumption tax. They're going to raise their gasoline tax instead. Right. But anyway, any move away from an income tax is a good idea, even though Mississippi is doing it wrong. It's they're doing the right thing.
Well, I wanted to, because the volatility of fuel prices, the use of it in easy times, and the as we saw during the pandemic, the reduction in fuel costs due to people not driving would affect that particular method of taxation in terms of operating your state. So I went right to the last section of the Deloitte article for the conclusion that they have is a consumption-based tax system better than an income tax system. And I'll just very briefly go over it in the little bit of time that we have left. Throughout the article, and I'm quoting now from Current Trends in State Taxation, Consumption Tax versus Income Tax from Deloitte, written in the winter of 2014. Throughout this article, we have discussed various aspects of a taxing system that is based on consumption taxes, i.e. sales and use tax, excise tax, as compared to a taxing system that is based on income tax collection. We looked at the theory behind each system. We've evaluated these systems at both the federal and state level and discussed the trend in many states of moving to a system that is based more on consumption taxes as opposed to income taxes. There is an argument to be made, often by economists, suggesting that a consumption-based system drives economic growth and creates a friendlier climate to attract businesses and others to move to a particular state. However, these attributes must be balanced with the potential for shifting the tax burden to lower and middle income taxpayers. Again, they're not talking about the fair tax there, because the fair tax takes care of that situation and brings it about through the prebate. It can be argued this outcome can be avoided if certain steps are taken when designing a consumption-based tax system. For instance, many states exempt sales tax on groceries and so on and so forth. Fair tax handles it across the board by providing the prebate to everybody.
You do not want to get into the business of what qualifies for an exemption and what doesn't, because then you destroy the simplicity of the system.
That's correct. So
got 2 minutes.
Okay, I'll take one. While the focus, I'll take one. While the focus of this article is on state efforts, we see at the federal level that a consumption tax can be a hard sell politically, which we are experiencing. Go Congress.gov, you see why our elected officials are not interested in something like this. Democrats often worry that rebates and exemptions may not be enough to address their concerns about regressivity, again, the prebate, resulting in a tax that may unfairly burden lower middle income taxpayers. Republicans, on the other hand, contend that consumption taxes, particularly value-added taxes, are money machines and fear that rates will continually ratchet up to fund increased federal government expenditures. So right there, those are the two. This is what Deloitte came up with as one of the two reasons. One, the Democrats, one, the Republicans, why the Internal Revenue Service is not mentioned as being gone in this Deloitte article or any of the articles that I've found here of late that actually truly deal with consumption tax versus an income tax. There is not one optimal tax structure that should be implemented in every state, according to the finality of this article. In the end, not considering tax reform may result in the continued budget shortfall crisis faced a decade ago, which is still happening today all over the country. And so that's where we'll leave it. Fair tax has all those items, all those concerns that Republicans have and Democrats have covered. For the Republicans, the Internal Revenue Service goes away. It's not a value-added tax. Democrats, the prebate covers the consideration with low income exposure to higher costs in living.
All right. Well, you done good. Hopefully I won't have to have another tooth pulled anytime soon, and we can continue next week here with our fun and frivolity of FAIRtax Power Radio. But we are out of time for this particular session. Thank you so much for all your research here in the past week. And we will see you next week, same time, same channel on FAIRtax Power Radio. Again, thank you for watching. Thank you for sharing these videos. That helps a great deal. Till we meet again, I'm Bob Paxton.
I'm Bob Scarborough.
We are the FAIRtax Guys, providing you the fair tax is the only truly fair tax. And once you understand it,
you'll demand it.
So what do you need from me to get these taxes collected?
Glad you asked, because there is a fair amount of information you need to be aware of.
That's your tax plan?
Oh, no, this is just the revisions for this year's tax plan. What I need from you is you need to keep track of all of your income, as well as any taxes that you've already paid. Also, any gifts that you received or gifts you've given to churches or charities or individuals throughout the entire year. Do you do any side jobs?
Every now and again.
Great, because there's some more information about that right here. Everything you need to know right here. So just simply compile that, send it in to us. Be careful, make sure there's no mistakes. If we do find mistakes were made, we can fine you or, throw you in jail. So you might want to be aware of that.
And what do you need from me?
As an individual, nothing. As a business owner, or if you're doing side jobs, yes, you would have to collect taxes on that, but it's all right here.
Can I get a copy of that?